Welcome to Next Gen Finance, the channel where we break down the biggest UK money stories in simple, clear language so you can understand what's really happening behind the headlines. Now let me start with a headline that sounds scary at first glance. UK government borrowing has hit the second highest level ever recorded. That immediately raises alarms. Is the UK heading toward a fiscal crisis? Or could this actually turn into an opportunity if handled correctly? Today, we're going to unpack what this borrowing really means, why it's happening, and how it could affect your money, your future, and the wider economy. When people hear government borrowing, they often imagine disaster, more debt, higher taxes, less support, and tough times ahead. But borrowing itself is not automatically good or bad. Just like a household or a business, what matters is why the money is being borrowed, how it's used, and whether the economy can support it over time. So why is UK borrowing so high right now? There are several reasons, and they're all connected. First, the government has been spending heavily to manage economic pressure, support for households, energy costs, public services, healthcare, and infrastructure has kept spending levels elevated. At the same time, economic growth has been weak, which means tax revenues have not risen as fast as expected. High interest rates have also played a major role. When rates are high, the cost of servicing existing debt increases. Even if the government doesn't borrow more, it still has to pay more just to manage the debt it already has. This pushes borrowing figures higher without any new spending decisions. Add to that long-term challenges like an aging population, rising healthcare costs, and slower productivity growth, and you start to see why public finances are under such strain. These pressures didn't appear overnight, and they won't disappear quickly either. Now, here's the key question. Does high borrowing automatically mean a fiscal crisis? The honest answer is no, not necessarily. A fiscal crisis happens when a country loses control of its finances, investors lose confidence, borrowing costs spiral, and the government struggles to fund basic services. The UK is not at that point. The UK still borrows in its own currency, has strong institutions, and has deep financial markets. Investors continue to buy UK government bonds, which shows there is still confidence in the country's ability to manage its debt. That doesn't mean everything is fine, but it does mean the situation is more complex than the headlines suggest. This is where the idea of opportunity comes in. If government borrowing is used wisely, it can support long-term growth. Investment in infrastructure, skills, technology, and energy security can raise productivity and expand the economy. A stronger economy makes debt more manageable over time. Think of it this way. If borrowing helps the economy grow faster than the debt itself, the overall burden becomes easier to carry. But if borrowing is used mainly to plug gaps without addressing underlying problems, the pressure builds year after year. That's the real risk facing the UK right now. Not borrowing itself, but how effective that borrowing is. Spending that boosts productivity can pay off. Spending that only delays hard decisions can make the situation worse. So, what does this mean for you personally? Government borrowing affects everyday life in several ways. It influences future tax decisions, public spending priorities, and economic stability. When borrowing is high, governments often face tough choices. Taxes may rise, spending may be cut, or a combination of both may be used to bring finances under control. You may not see immediate changes, but over time, frozen tax thresholds, reduced support, or tighter budgets can quietly affect household finances. At the same time, if borrowing supports growth, job opportunities and wage growth can improve, balancing some of the pressure. Interest rates are also part of the story. High borrowing, combined with high interest rates, puts pressure on public finances. If interest rates fall in the future, debt servicing becomes easier, freeing up money for other priorities. This is one reason why financial markets pay such close attention to inflation and rate forecasts. Another important point is how borrowing affects confidence. Business, investment, consumer spending, and international perception all matter. If people believe the government has a credible plan to manage debt over time, confidence remains stable. If that confidence fades, economic growth can suffer. This is why fiscal credibility is so important. Clear plans, realistic targets, and transparent policy decisions matter more than dramatic announcements. Stability builds trust, and trust supports growth. It's also worth remembering that the UK is not alone. Many advanced economies are dealing with high public debt after years of crises, including the pandemic, energy shocks, and global uncertainty. The challenge is not unique to the UK, but how each country responds makes a huge difference. The next few years will be critical. Decisions about spending, taxation, investment, and reform will shape the UK's financial position for decades. This is where long-term thinking matters more than short-term politics. For individuals, the best approach during periods of high government borrowing is awareness and preparation. Understand how tax changes might affect you. Review savings and debt strategies. Focus on skills and adaptability, because a changing economy rewards flexibility. Panic is rarely helpful, but ignoring the issue is risky too. High borrowing doesn't mean collapse, but it does mean the margin for error is smaller. Smart decisions at both government and household level become more important. So, is this a fiscal crisis or an opportunity? The truth is, it's a crossroads. The outcome depends on what happens next. With smart investment and credible planning, high borrowing can support recovery and long-term growth. Without that discipline, it can turn into a lasting burden. This is why understanding these issues matters. Headlines are designed to shock, but real financial understanding comes from looking deeper. When you understand the system, you're less likely to be caught off guard. If you want clear, honest explanations of UK finance, government decisions, and what they really mean for your money, make sure you subscribe to Next Gen Finance. We focus on understanding, not fear. If this video helped you, give it a like and share it with someone who wants to stay informed about the UK's financial future. Turn on notifications, because in our next videos, we'll break down what high government borrowing could mean for taxes, public services, and long-term growth. Thanks for watching. This is Next Gen Finance. Stay informed, stay prepared, and remember, understanding the numbers today helps you protect your future tomorrow.